below. As always, I got a video for you all, so please make sure you guys subscribe. Help this video reach 1,000 likes. Without further ado, let's go ahead and dive into it. Guys, I have 6 stocks for you to get before the Fed rate cuts. Okay, guys, you are going to be faced with either a buy the rumor, sell the movement, or you're going to be faced with reality that
There we go.
A rate cut is going to benefit certain stocks while not benefiting others. Today, I want to talk to you guys all about some of the assets that you want to be in and have and be part of if you want to continue to make money on this journey. But also, I want to tell you about the importance of having a plan, having a strategic way that you want to take profits, lock in profits if you have done significantly well in some of your plays. Okay, we're going to touch on all that in today's video, but let's go ahead and dive into it. Guys, everybody, I got gold pulled up. Please be in the Discord. First thing in the morning, we will get busy right out the gate, cracking the head of SPY and Tesla. Be there or be square. Guys, I'm going to lay the levels out, pinpoint to a T. So all you got to do is choose the direction that we are going on that day come tomorrow. Keep it simple, okay? Keep it simple. GLD, okay? This particular asset will be one of the main beneficiaries of a Fed rate cut. Write this down, okay? Some people sleep on this asset class. Some people sleep on this commodity and don't know that how you can get rich just off of GLD, okay? GLD as in gold, short for gold, okay? Put this on your radar. I want you to own shares and or you can trade options on this, meaning buy call options, okay? GLD, if we have a rate cut and things go crazy, this will be one of the things that benefits positively, okay? Some stuff is going to come down, and even if this goes down, you just need to look at it as a chance to get it lower than 335, okay? Next, we have Bitcoin, ticker symbol BTC. I already been pounding the table about you guys needing to have Ethereum, you guys needing to have Bitcoin. If nothing else, guys, it diversifies things inside of your portfolio. It diversifies things in terms of the assets that you guys are holding and how you want to be positioned. So, for example, banks are going to crash when we cut rates, okay? Banks will go down. They benefit from these rates being high. They can have high yield savings accounts, CDs. But when these rates get cut this week, banks are going to crash. So we don't mess with banks anyway. So I'm just trying to teach you a lesson, okay? But if banks will go down, you have to know what's going to go up, okay? Then there will be times when this is all said and done and we raise rates again, banks will go up and tech stocks will come down. And it'll just be a trade-off depending on what's happening. But a rate cut may lead to banks going down while gold goes up. Let me know if that's understood, okay? I want to make sure you guys know these types of things so that you know the rhyme and reason for why you buying certain assets, okay? Bitcoin, nevertheless, everything you see about this is a buying opportunity. Under 120, under 110, in the 90,000. If you ever see 80,000 handle, you need to be thinking this is going to 150, 200K, 300K. No questions about it, okay? That's how you need to be thinking about this. So if you didn't get it at certain levels, if it do pull back, yep, look at it like that's my opportunity. That is my opportunity. What else Coach got for you? Lyft. Shout out to everybody that's been getting busy with us in Lyft. Ticker symbol LYFT. This is more of a technical thing for Coach, okay? I am a technical expert. I am a technician, aka a surgeon that does this with precision, okay? Listen to this. Lyft is going to $20. That's target number 1. So if it ain't at 20 yet, you can get in it because from here to 20 is still a good move. If you can get 16, 15, or 14, that is even better because we're still going to $20 as target number 1. Once we bust through 20, guys, then we're going to make our way to $30. I want you guys to look at it similar to how SoFi is doing. You're going to have that type of play out in this, okay? I want you guys in Lyft, okay? We are trying to hit $20. Let me know if you got that on Microsoft. Put 20 ball in the chat. Put 20 ball in the chat, okay? That's target number 1. And then if you got this out with me to January 2027, you are to hold it with me to $30. I want to teach you how to change your life. I want to show you how to change your life, okay? And then What else, Coach got? Uber. Uber is still waiting to bust through into $100, and I want to be here for it. I want a front row seat with the same gang with the family when we do so. Okay, this particular asset is going to be best in class above Lyft. So if this goes higher, this can lift higher. Let me know if that's understood. Okay, and while all of these things are at play, Lyft is a cheaper option. So I always want to present opportunities for you guys to get in and partake in things that's affordable. Sometimes certain assets, like a Tesla, for instance, the options on that cost an astronomical amount. So I sometimes sacrifice my success and my win rate to try to find you something like a Lyft, you know what I'm saying, that is affordable for the masses so that you guys, if nothing else, can see what's possible. I'm not so much caught up in the money as much as I am in showing you a skill that can change your life, a skill that can get you off the corporate plantation, a skill that can help supplement your income. Guys, it's crazy times in the world. Things are extremely high. Things are sky high, whether we're talking housing, cars, rent, food, you name it. And so if I can show you different things, different assets, different techniques and strategies that you can make money off of, for instance, I told you about the Terrence Crawford fight yesterday, and now you can bet on almost anything on these platforms. And so I am not only a financial savant, but I am a boxing connoisseur. Meaning I have a high IQ for the stock market. I have a high IQ when it comes to sports. I do this for any football, basketball, baseball, and boxing in particular. So if I tell you something, guys, you got a high probability if I'm speaking on it, it's going to come out how I say it's going to come out. Okay, I don't really miss on these things, especially when it comes to sports. You might can get me because Wall Street can pull some strings, but as a sports guy, as an athlete, I don't miss when it comes to sports. Okay, I have a different eye than most people. I remember people try to tell me just fighters who they thought was going to win, and they don't. But when you don't understand boxing, you don't know why styles makes fights. You don't know about different intangibles or why a fighter moving up weight classes can beat another fighter that's way bigger. You know what I'm saying? You don't know these things if this is not what you do. Same thing, guys. This skill can teach you something, okay? So Uber to $100 and beyond. I know as soon as it hit it, it's going to finally have that takeoff moment, which I'm waiting for. But be patient, guys. Be patient, all right? It's been taking a long time to get there, but this started at $20. Okay, that's how long ago I had you guys in it. Now we're just knocking on the door. You know what I'm saying? Trying to finally get through into $100. Okay, what else, Coach got? SoFi. Look at SoFi sitting up at the close of $26.55. Remember, we was in this at $4 and $7. Now we are sitting extremely high up here at $26. Listen, guys, don't rule out $30 on this. Okay, if we get a boom, don't rule out a test of 30 before we pull back and cool off and take a breather. That's why I keep saying have a game plan, meaning how are you going to take profits? What are you going to do with the plays that you are up significantly in? Yes, you have a chance to go if you are holding these long term, like 10 years out. Yeah, you don't need to do nothing. Okay, but some of you that need to lock in profits, needs to realize profit, this is your opportunity to do so. So then if and when stocks come down, you are in position for the rinse and repeat. That's what I want you guys to do with Coach, because that's what I do, okay? I have my long-term stock. So, for example, if I take profit on my SoFi play, I'm putting it in SCHD, I'm putting it in VTI. Then when this come back down, I'm going to rebuy it again for the rinse and repeat opportunity, okay? Let me know if that's understood. And then, guys, we got Palantir, ticker symbol PLTR. This has been a proven winner time and time again. It will be no different, but nevertheless, this too is stretched. This too is up extremely high. It already done fell 20% from the high. It's climbing back up, but remember I taught you guys about buy the rumor, sell the news? This could be a situation where after the rate cut is announced, we might run up into the rate cut. Boom. and then on Wednesday, Thursday, they knock it back down, or in the month of October, knock it back down. Don't you front run though, guys. Listen, don't guess, don't gamble, react. Write this in the chat. Don't guess, don't gamble, react. Don't say, oh, I think this play is going to go down. You need to wait for signs that it's going to go down, meaning it need to break support first. So like if this is 171, until this break like 162, you need to not be thinking about a put. Let me know if that's understood. You can't just buy a put because you think something. You need to like, okay, we lost a key level of support. Now I am going to get bearish, okay? And then last but not least, guys, is NVIDIA, ticker symbol NVDA, best in class, best stock market on the stock market, best stock on the stock market. And Coach still
Rare earth stocks, guys.
$230 price target on this, whether we get to it at the end of the year or into next year. I want to say major salute to those of you that been in this with Coach since the 100K challenge started on January 1st. This was our main play. I gave you many plays along the journey, but this was our main play. So if nothing else, I don't care what APOD has done for you. I don't care what SoFi has done for you. I don't care what AMD has done for you. If nothing else, the NVIDIA call out, which is up over 180%, has done the job, or at least have shown you what was possible. So now this year for 2026, you should be in position for our play for 2026 so that you can be like, yep, I now see this brother. I trust his process. I see how everything he say will be successful, will come to pass, and will manifest just the way he says and projects it will, okay? You gotta trust the process though, guys, and understand that it's a process. Listen, man, Coach gonna get you guys up out of here. Everybody be in the Discord first thing in the morning. Everybody else consider joining the money team this week because we are about to eat. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks using my link below. And I'll catch you guys in the next one. Peace.
All right, let's listen to Kevin.
Is Oracle, CoreWeave, NBIS, IREN, why are all of these companies, these data centers, throwing more money at building out more capacity if all of a sudden we're getting our first canary in the coal mine that we actually have too much capacity, right? I mean, think about it this way. Let's come up with an analogy. Let's say you have an ice cream stand and you're selling ice cream. And you're on the phone going, guys, more ice cream, more ice cream. Keep ordering more ice cream. We need more shipments. Back up the trucks. We need more trucks. And you're standing at the ice cream stand, and your employee who's actually selling it to customers is looking at the ice cream bin, and you're like, bro, we have so much ice cream. Some of this down here at the bottom, it's starting to go stale. Like it's getting all frost burned because the ice cream's going stale. And I'm trying to sell the frost burned ice cream, but I can't sell it. And then the guy at the front desk is like, hey, NVIDIA, I need you to buy some of this frost burned ice cream because we have too much of it. Get rid of the old crap at the bottom. All right, I guess fill it back up again. We really don't need to fill it up again. Meanwhile, you got the guy in the back. This is good for the stock price of the ice cream stand. Keep the trucks.
All right, love the analogy. Let's do a little breakdown here, okay? Oh dear. This just looks so good, this rare earth company. There's one stock that looks excellent right now. It's going to go up, in my opinion. The stock is MP. It's MP Materials. It is a rare earth company. And it did have a $400 million Department of Defense agreement, as well as a price floor that's guaranteed. So even if prices fluctuate, we know and they know what they're going to get paid by the Department of Defense, by the government, plus a deal with Apple. So I'm not sure it gets better in terms of serious backers, the government and Apple and we know we're trying to increase rare earth independence from China. So let's take a look at the chart and see why, even if you don't think any of those newsworthy fundamental reasons to buy this stock matter, you're still intrigued. Look at this chart right now. This is the $400 million Department of Defense agreement. If we look way back here, it basically climbed until August 8th, okay? And if we look down here, this is the Apple deal, okay? July 18th. This is a huge number, $500 million. That's not a typo. And I don't usually get excited about price targets, but when top tier investment bank triples their price target, I think it's actually warranted in this case, okay? Tripling the price target is a little extreme, but look, I think it's fair to say that this $500 million deal for Apple to purchase rare earth magnets from the company definitely reduced the company's operational risks. That's the understatement of the century. Now, this is important the way this is phrased here. The stock has now priced in the catalyst, and other potential catalysts are on the medium term, as she maintained the hold rating on MP. So, again, I don't normally read into analyst statements too much. However, what is this saying? Well, as of July 18th, this $500 million Apple deal is priced in. Other potential catalysts are on the medium term. That's pretty unusual to say the medium term, but if I am to understand that correctly, this is when that statement was made. Okay, so the Apple $500 million deal was priced in. Then we got the $400 million Department of Defense agreement to buy at a price floor for their magnet making materials. And then we're all the way up here, right, resting on this technical level of about $60. So, big picture, you can buy it right here at $60. You can risk a few dollars, and the stock, if we are to believe that analyst, which tripled their price target, the stock could go to at least 90, okay? So you could make $25 and risk a few dollars. That's the bottom line. Two huge catalysts, fine. The $500 million Apple deal is priced in. Okay. Then, after that analyst made that statement, there was the $400 million Department of Defense agreement with the price floor. Pretty huge. And right now, the price is resting approximately where this level got formed. And all that means is that buyers and sellers agreed this price is pretty accurate as far as how this company should be priced at the time. Okay, it is a market, so it changes, but I'm not trying to be facetious or anything. I'm saying that despite all the nuance that could be here, we have this agreement between buyers and sellers that 60 is a good price for this company. It came back, it touched, it held that level. So buyers and sellers still agree it's a good price. And now it's curling up, which means we can risk that level and potentially make a lot more. And that is the name of the game in terms of medium term. Again, to use that phrase that analysts used in a slightly different way, medium term investing, which is what we're all about here, okay? We're not just going to hold this company for 5 years simply because this news came out in the past well, 2 months. Anything could happen in the next couple months. So if you're someone who checks your portfolio every week at least, this type of investment, this type of trade is for you. Okay? And if we do want to get exact dates, okay, we saw on the chart that was July 10th, the partnership with the Department of Defense, 400 million. Okay, it is in preferred stock and warrants. Okay, they become the largest shareholder. I don't think that particular arrangement of the deal is particularly bullish or bearish. That's sensical, okay, just like any other shareholder, except this time it's a department of the government, similar to the Intel stake that people have been deeming controversial. It is a little controversial, but when you're a smaller company, okay, $400 million, whether it's controversial or not, it's bullish, okay, undeniably. Now, this is the partnership with Apple, okay? This says July 15th. This is after the Department of Defense announcement. However, on the chart, we did see that even though it was announced after that announcement, when we look at when that analyst actually talked about that deal, this is a little bit later actually, July 18th. So in complete transparency, okay, I messed up. The Department of Defense deal came first. The Apple deal came after, okay, about a week after. And then the stock went up even more. So now it all makes sense. The analyst comments are still relevant. In fact, her tripled price target actually puts it up around 150. So now we're just going to completely ignore the price targets, which we always do anyway, okay, because they're made up. But we still have this perfect level. Those two catalysts are huge. They are priced in because we're past that date. And all you have to think about now is, do you have buying power, and what is your type of risk that you're willing to allocate to this company? If you like talking about stocks, if you want to talk in a community, you can go to stockscommunity.com, and I'm in there every day. It's $25. Try it out for 7 days. If you like this analysis, give it a shot. Hit that subscribe button if you haven't already, and I will see you in the next one. Let's see what Kevin has to say.
It's coming. Keep them coming. Hey, bankers, more loans, more debt. Hey, attorneys, another filing. Sell some more stock, okay? Stock market's at all-time highs. Take advantage of it. Sell some more stock. Buy more chips, more debt. Let's go. Back up the truck. You're selling, right? Yeah. We're selling the ice cream. Frost-burned ice cream, going to NVIDIA. This is not good. This is like an early canary in the coal mine. And trust me, I do not want to be bearish here. I want my NVIDIA shares to go to the moon, because there are these leftover shares that I actually have a lot of, many thousands of. And I'm like, oh, this is great. So I want to be bullish here. But part of me now is like, oh, scheisse, right? Like, this sucks. So the biggest concern is you can't sell these data center products, because how the cycle plays out, right? The cycle always plays out this way. The cycle is really easy. You end up with excess supply, then you get lower utilization, then prices go down. Then there's a lower return on your investment for data centers. Then CapEx goes down. Then you have lower sales at NVIDIA and Supermicro and TSM. Then stock prices go down. Then people lose their jobs. And all of that falls onto an already weak economy. That's not good. It all starts with the frost-burned ice cream, the excess supply. The cycle is always excess supply. Have you ever seen Meet Kevin's real estate chart? Meet Kevin real estate cycle. Let me see if I could just Google it really quick, because there's an old Yeah, there it is. Look at this. So this is an old thingy here that I made this back in like 2010. Okay, so I drew this cycle back in 2010. Let me put it to the desktop here. I wish I had a higher resolution of it, honestly, but it's such an old chart from you know, when I was like getting into telling people to go buy real estate. Yeah, it's super blurry. I was telling people that we're probably here in 2010 and you should go buy real estate. But it always starts, I mean, look at this cycle. You could really call it the AI cycle instead of the real estate cycle. Look at this. Absorption of excess supply. Oh my gosh, the GPT moment. We're out of chips. Oh, we don't have enough chips. Prices skyrocket. Margins skyrocket at NVIDIA. Then it says accelerated new construction. Build, build, build. Back up the truck. Then you get an oversupply of those data centers. That leads to low utilization. In real estate, we call that high vacancies. Then prices go down. The real estate cycle may as well just be the business cycle or the AI cycle. So now we're here. We're at this accelerated new construction phase. Literally the real estate cycle that I talk about in my courses probably applies to the AI cycle. Now, like, if you're not already part of the Meet Kevin membership, you really should be. Some quick calls that I want to point out just from literally the last few days. One of them, well, first of all, look at this, okay? Figure is up like to $40 and it's skyrocketing right now. It's up like 19% or something like that. And I wrote last week, this is a $45 to $55 stock. CoreWeave, we talked about if we don't confirm 124.9, don't touch it. And what happens? We don't confirm 124.9. We literally reject off of 124.9. Don't trade that up. Then in the Meet Kevin membership, we talk about the most bullish thing for Tesla is popping onto the 414 line, which we bounce on twice, which is bullish. And I said as long as Tesla doesn't dump it open, the trading strategy for today is the Qs slowly continue to slog higher. The next target is 590 on the Qs. Now, why do I mention that from the Meet Kevin membership? Well, because I think there's, first of all, obviously a lot of value in the Meet Kevin membership. But if you look at the Qs, what did the Qs do today? The Qs literally went straight up to 590. Well, what happened with Tesla stock today? Well, we know what happened with Tesla stock. It literally went down to 414 twice. It didn't dump it open beyond our line. Therefore, the Qs were able to go to 590. And we had a double bounce at 414, which we also called that it would likely go towards. These are the things that you get if you're a member in the course member live stream. So join us at the Meet Kevin membership over at meetkevin.com. But let's keep going with this chip analysis, because this chip analysis is a problem. When we actually understand that this is a cycle that ends at some point, we start getting a little nervous because this partnership with CoreWeave is a big red flag in my opinion. Look at this. NVIDIA was willing to enter what are called MSAs in 2023. And they probably entered these MSAs with other companies to get as many sales as possible. MSAs are basically these contracts, material service agreements, that guarantee that, they call them master service agreements, that guarantee that NVIDIA will buy excess data center capacity. Well, why would NVIDIA need to buy excess data center capacity unless there were excess data center capacity, right? So NVIDIA now buying data center capacity means CoreWeave can't sell all the data capacity. Last week, NVIDIA got or exited the data center industry. What does that mean? That means NVIDIA no longer wants to build out data centers to license the actual data centers to you, because they're already having to buy the excess capacity from CoreWeave because it can't be sold. Now, the problem is the next earnings report is when we'll actually get a copy of the material services or the master services agreement. We won't get that until November 14th. We literally have to wait 2 damn months to get this MSA. This MSA is going to show that NVIDIA has to buy these damn chips or the output from these chips through April 13th, 2032. This is so smart by CoreWeave that they did this. And if CoreWeave pulled it off, because I don't necessarily think they're particularly brilliant, but if they're able to pull it off, then other companies probably pulled this off as well. It basically means that NVIDIA went out there whoring themselves out, going, buy our chips, take on debt, and dilute your stocks, buy our chips, we'll guarantee they make money for you. Well, that's like the perfect way to set up a bubble. I mean, look at this. This is CoreWeave. When they IPO'd, they raised $1.4 billion by IPOing, by issuing shares. And then they took on another $3 billion in debt, all to go buy more NVIDIA stocks. So, of course, NVIDIA wants, desperately, their companies to go buy more NVIDIA stocks. So whatever they can do to prop up and enable these companies to go, great. So if they can dance around like, you know, the naked heavenly maiden and they can go, hey, you know, let's go. Buy more of our chips. We'll guarantee that they're functional. Great. But what is Jensen Huang? Because a lot of people are like, oh, Kevin, Jensen Huang's really smart. You know, trust what he's doing. Yeah, I will trust what he's doing. Jensen Huang sells $13 million worth of shares, July 19th. Jensen sells 37 million shares a week earlier. Jensen is able and has filed to sell as many as 6 million shares, which is worth $1 billion. That's a lot. It's a lot of selling. It's the opposite of what Elon Musk is doing, who just bought $1 billion of Tesla shares. And he made that back like instantly by pumping the stock. So, you know, does it really matter? No. But, you know, it's interesting. It's the opposite that's going on. So now, when we look at this material services agreement that comes out November 14th, what we're going to want to look at is the big questions now are what price is NVIDIA buying data center capacity for? Are they paying 2023 prices? Because prices are going to fall. So if they're stuck paying 2023 prices, they're going to pay over market value. Or are they going to pay a market value? We don't know. We don't know the details. How much spare data center capacity is there? Are we talking about, you know, a day worth of extra capacity that CoreWeave is making NVIDIA buy? I don't know. But this really changes the argument because I've always said that in the short term, CoreWeave, NBIS, IREN, Oracle, great short-term plays. But they're long-term bag holders. Basically, inside the bag are NVIDIA chips. The bag itself are like the server racks, like Supermicro. Supermicro is able to sell the chips, TSM is able to sell the chips, NVIDIA is able to sell the chips. They all wash their hands of the chips, and somebody else holds the bag. Who holds the bag are the data center plays. CoreWeave, Oracle, NBIS, IREN. So short-term good for them, longer-term bad for them. But this literally flips all of that on its head. It literally lets CoreWeave take the bag and dump it back onto NVIDIA. It's almost like a repurchase agreement. So I hate this for NVIDIA. NVIDIA, it now sharing in this data center capacity marks an inflection point in artificial intelligence. It's a red flag. Now, so far, nobody's really talking about this. I saw a Doomberg reaction that said, oh, this is good. It could it could ease concerns about CoreWeave's overbuilding because there's a long-term risk of overdeveloping AI infrastructure. Yeah, no duh. Like, of course there's a long-term risk of overdeveloping AI infrastructure. That's the problem. But the fact that even the suits aren't realizing that this is bad for NVIDIA, right? Because if there's overcapacity, if CoreWeave is like, man, we've got overcapacity, hey, NVIDIA, start buying back. At some point, NVIDIA is going to go, hey, man, we'll sell you chips, but we're not going to keep guaranteeing we're going to buy back all your capacity. Because if they're buying back overcapacity, they're getting ripped off, NVIDIA is going to stop doing it. That tanks NVIDIA chip sales. Now, again, maybe this is just a really, really early canary in the coal mine, but I thought this Tony guy's comment was right on. Is it just me, or is all of this NVIDIA, CoreWeave, OpenAI, etc. stuff just a circle jerk of companies buying from each other at inflated prices to push up each other's valuations and then rinse and repeat? I'm not the smartest guy around, but this all seems very predictable and tiresome. I think he's got a really good point. And this MSA is really scary. Now, we'll see what price NVIDIA has to pay November 15th. It's scary to me that we have to wait that damn long to get it. You know, somebody else in the chat commented this. A shout out to Brandon in the chat. Let's go, Brandon. He's never heard that one before. Brandon in the chat said at his company, the first thing they strike from their contracts are buyback agreements or arrangements. This is basically, you know, what this is you're buying back the output of these chips. So now to be clear, NVIDIA is not buying back the chips, they're buying back the extra compute. This comes just as last week NVIDIA left the data center business, right? So it's all sort of aligning. Like if the data center business was so profitable, why would you leave it, NVIDIA? You know, it's a start of a cycle. It's the start of the canary in the coal mine. This is what the cycle looks like. Again, just like the real estate cycle. Excess supply, lower utilization, lower prices, lower ROI on data centers, lower CapEx, lower sales at NVIDIA, SMCI, TSM, lower stock prices, job loss, all fall onto an already weak economy. This is such a huge inflection point, and nobody's talking about it. So either I'm wrong, or I'm just really early. And my wife already tells me I'm really good at being early, so I'm probably correct, just again very early. Time for drilling stops. I'll tell you when I dump my, how about this? I'll make you a deal. When I dump my NVIDIA shares, you'll be the first to know in the Meet Kevin membership. And let's just put it this way, I've got over 10,000 of them. So I will tell you when I dump them. You'll be the first to know in the Meet Kevin membership. So to me, you know, then somebody I saw in the comments said, you know, oh, this is good for NVIDIA. They can control the data centers but not own it. And then I responded and said, no, that's totally wrong. They don't control the data centers, and they don't get the upside other than, you know, more chip buying, but they are responsible for the downside. So it's literally not control it, don't own it. It's don't control it and be responsible for the downside to squeeze out money in chips today. You're basically saying, hey, we could get 3 years of selling you chips, and if shit hits the fan in the future, no problem, I already made my money. That's scary. You know, this is the part where people wonder, like, okay, when does it turn? I mean, I don't think anybody's going to really pay attention to the Empire Manufacturing report from this morning. I don't think anybody's going to give a flying hootie doody about this. You know, Empire Manufacturing, first negative read since June. Really, we're in a place where you have to look at, I mean, here's just the bottom line of it, okay? So inventories get used up. They wrote inventories edge lowers, while at the same time companies are buying less. Orders and shipments fell sharply. Okay, that is literally written right here. Inventories edged lower, and new orders and shipments fell sharply. What does that mean for the market? Well, it's bullish in the short term, A, because nobody's going to care about this report. It's bearish for the long term because it's a bad report. And then for employment, they say that employment came in at 0, but productivity went down. The average work week went down 5.1 hours. That is bullish short-term jobs report, bearish long-term. So, yeah, I don't know, man. All this makes me nervous. So, you know, if you want to play the short term, you need to do the following. On CoreWeave, okay, so some technicals. You can't play the CoreWeave upside until you break out of 125. That's my opinion. Tesla needs to hold 414. Elon's pump probably won't be enough to hold it up alone. Okay? Very important. Pay attention to that. In addition, watch what's happening with NVIDIA, especially that MSA. Okay? That's a really, really, really big deal. So watch that. And then, yeah, as far as my top 10 stocks to buy, keep in mind I also have a top 10 stocks list not to buy list that we started. We started that, I think, Thursday or Friday. So we're developing that all. We include it now daily at the bottom of each alpha report, starting with this morning's alpha report, which did really well. Make sure you're part of it in the Meet Kevin membership. All right? So there you have what's going on in the chip sector. Good Lord.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Okay, let's do a little breakdown of CoreWeave. It's a pretty big deal. NVIDIA investment and new $6 billion deal. So let's do it. There's one AI company that is backed by NVIDIA and just got a new $6 billion deal with NVIDIA today. It's at a favorable spot technically, and I can't think of a better AI linked stock to buy right now. So let's jump into the chart right now. This is the chart, and the favorable spot is right here around 110, and in particular, if we zoom in the past few days, 120. You can see that breakout level clear as day. Now, why now? They just had a $6.3 billion cloud computing agreement with NVIDIA. It formalized last week, and it extends through 2032. So that's a long time. It does obligate NVIDIA to purchase any unsold computing capacity from CoreWeave's data centers. That's a huge deal. Again, NVIDIA already invested them to the tune of $100 million for about 6% stake. And now they also have financial stability by guaranteeing demand. So NVIDIA is making sure this company is going to succeed. NVIDIA is expensive right now. CoreWeave is not. In particular, we did see that this matters already. Stock did go up today. There was a noticeable uptick. Okay. This is September 9th. You can see the stock has gone up and is now at a favorable level technically. So what was happening on the 9th? Well, there was some other news, okay, $20 billion deal between Microsoft and Nebius. NBIS is also in the data center business, okay? So huge multi-billion dollar deals. This is 2031. It's very similar to 2032. This is what you call a theme, okay? And if we look at NBIS, look at that move, all right? So it's okay that the initial moves already happened in these two companies. I personally like the chart more on CoreWeave. If we look at NBIS, we can see the comparison here. You're kind of buying, hoping for a second move, even after you just had one that was ridiculous. Okay, 40-50%. So if you consider CoreWeave's only gone up, 40%, and it actually took a week rather than a single day, there's a lot more meat on the bone and blue skies in the case of CoreWeave, okay? It doesn't hurt that it is backed by NVIDIA, so that it's very unlikely this is just going to drop off the map. I do suggest that you watch your position. I'm just saying it never hurts to know that they do have a partnership and a literal investment, okay? There are strategic reasons to buy this company, and importantly, for the value investors who understand filings, there was a lockup period that expired about a month ago, okay? 80% of the shares were released. There was a sell-off, including a large sale by a director. But this was the time, well, actually, it was exactly here, okay? So it coincided with earnings. But we're getting back to that level, and the benefit now is we already know that those stocks are in the float, Okay, if you don't know what a float is, it's the publicly traded shares available for us to trade. So we don't have to worry about directors selling shares. We don't have to worry about lockup periods. We don't have to worry about insiders. We have a real catalyst. We have a safe risk level off of this 120 going all the way back to this left side peak from May of this year. We have an undercut sort of rally, which is a technical sign of buying activity and demand following a sell-off event, which happened with the lockup period. We have a lot of factors making this an exciting opportunity with minimal risk, which is what we talk about on this channel. So that's the play. If you want to talk about the nuances of all these investments, of these trades, of your portfolio, head over to stockscommunity.com. I'm in there every day. We can chat. You get to talk for 7 days for $25. It's a pretty good deal. If you haven't subscribed yet, hit that subscribe button. Hit the like button if you like it. And I will see you in the next one. Let's see what else Kevin has to say. Okay. Because I know, and you know, this man talks a lot. A lot.
A lot just
Here we
happened
go.
at the Federal Reserve, not only with Myron or Lisa Cook, Donald Trump, but also what JP Morgan is forecasting for rate cuts. We need to talk about it. ANZ's also got a forecast out on rate cuts. There's a lot going on. Here's a quick video to catch you up on everything. Okay, first things first. The appeals court just came in and said Lisa Cook is not cooked. Donald Trump, sorry, bro. We are denying the appeal. Lisa Cook is going to be at the September 16th to 17th
Little
Fed
internet
meeting.
lag, sorry.
This means that Lisa Cook, while she is still fighting the Justice Department and still fighting Donald Trump, she will be at the Fed meeting on the 16th and the 17th. The appeals court has decided not to pause Lisa Cook's involvement with the Federal Reserve, and they are keeping a lower court order that says, no, we are not kicking Lisa Cook out. She's going to stay. We're going to give everybody more time to actually litigate this and provide actual evidence. Now, we've broken down before that you've got Polte who's saying things like, hey, she committed mortgage frauds. She said she's on 2 different primary residences. And she's like, bro, one was a vacation home. And he's like, what? You told them it was a vacation home and then you said it was your primary? That's even worse. And then she's like, oh. So anyway, now they're in court over that. Okay, that's the Lisa Cook issue. She'll be there. Now, this will make a really interesting Fed meeting because you're going to have Myron there as well, who was just approved by the Senate, just secured enough votes just minutes ago. And what that means is you're going to have Myron, who's basically a Donald Trump shill, who actually is still on the White House payroll because of his role with the White House Economic Council, which basically means even though he's on leave, he still works for the White House, but now he's also a member of the Fed board. And technically, he could sit on this committee or whatever you want to call it for as long as Trump wants him there, because technically Trump doesn't have to choose a replacement, and he could just sort of de facto leave him on White House payroll and at the Fed as a voice for Donald Trump, which is really interesting because this person replaces Kugler, who supposedly is going to teach at Georgetown this semester, though still has no classes scheduled, who's also very partial to Donald Trump and not getting destroyed like Columbia got destroyed or Harvard got destroyed. Georgetown, that is. Anyway, so this then puts us at a very interesting Fed meeting. Now, of course, ANZ is coming out saying, hey, we're going to get 125 basis points of cuts between now and March 31st. That's because they see serious slowing in the economy. I mean, the Empire Manufacturing report this morning was crap.
125.
Okay, fine. But the market isn't really pricing that in yet. The market right now is pricing in a 5.3% chance of a 50 basis point cut this week, which basically means we're not getting 50. We're going to get 25. On top of that, we've got maybe 2.7 cuts priced in by the end of the year, and we've got about 3.8 cuts priced in by the end of March, which means if they're at 5 or 6 rate cuts, they're way ahead of the market, and they assume that rates are going to fall substantially more than markets are currently pricing in, which does set up some potential opportunities. And these are the sort of things we point out in the Meet Kevin membership. Oh, I wasn't expecting that to get small. I don't like it when it gets small. That's lame. See, I'm trying to. This is my first time doing these little flags, so to speak, and I thought they'd be really cool, but they're not supposed to change the ratio of my size. There we go. My size is supposed to stay the same. And then when I, throw up Meet Kevin, the Meet Kevin membership or whatever, like I made these myself, okay? I was really proud of them, and I just restarted my computer, and I guess on the restart, it just sort of like destroyed it and reset some of these aspect ratios. But see, I even made one for Webull because so many of you asked like, Kevin, where do you like do the lines and stuff? Like, Webull, they're doing a 2% deposit match right now. Or Kevin, do you finally have an affiliate link for the Meta glasses? And even though it's not technically an official one, yes. I mean, it is an official affiliate link, but it's not like they didn't contact me. They're like, hey, we want to sponsor you. They're just like default email link. But anyway, all right. And I made little banners too, which I thought are kind of cool. Yeah, see, that all works. See, that's cool. Oh, there's a little extra green there on the Capital One one. I'll have to fix a couple of those. Anyways, my first time trying those, okay? So I'm trying my best over here. I do it myself. See? Yeah, there we go. Okay, anyway, so what's really interesting here is now we should talk about the JP Morgan, analysis in terms of what they actually think is going to happen for rate cuts. So Farley expects 25 basis points of cuts with 2 to 3 potential dissenters. And those people are not going to be dissenting because they don't want cuts. They're actually going to be dissenting because they want more cuts. They want 50 basis points of cuts. But those are probably not actually going to happen this meeting. And that's what's going to make this meeting so interesting, or as some people like to call it, a very live meeting. Now, in the short term, I think all of this is bullish. Like them debating 50 or 25, this is really just broadly bullish for the market. It's one of the reasons in the Meet Kevin membership this morning I mentioned, hey, here we are at the Qs at like 587, 588. I think we're going to break 590 today in the Meet Kevin report because I see everything right now is short-term bullish. And sure enough, we broke up with a closing of 591. So day calls would have paid off really well again. These are the kinds of things we talk about in the Meet Kevin Alpha report. But anyway, I still maintain this modest bullishness right now. And the reason I do is because even though we're getting some red flags, like in my NVIDIA video, which pissed a lot of people off, a lot of people are like, oh my gosh, why are you pooping on NVIDIA? And I'm like, bro, I got the dip on NVIDIA in September of 2022. I send an alert to all my course members, like I do. I send trade alerts or whatever to the course members. And I'll send them trade alerts when I sell my NVIDIA shares as well, which I still got a whole lot of NVIDIA shares, over 10,000 of them. And, I'll send an alert when I sell them. But the point is, even though I made a negative video on NVIDIA, you've got to understand that if NVIDIA falls, it's macro. If NVIDIA has to go start buying up data center usage from CoreWeave and then 10 other companies, and then all those companies are like, man, NVIDIA's not going to be able to sustain this forever. Let's stop buying chips. Then the one leg that's holding up the damn economy falls, and then you're in a recession pooper duper, right? So, this is crazy. And of course, then if you say something bad about the NVIDIA group, all the NVIDIA shills come out and they're like, this is really bad analysis. This is just one filing. Skid, dude. Oh, I'm more bullish on NVIDIA than you right now, at least in the short term. But let's be goddamn. Don't use the Lord's name in it. Let's be dag on real here. If NVIDIA goes, it's a big pooper dupers for the economy. But anyway, in the short term, JP Morgan thinks we've got about a 1% chance of the Fed hike. That's not going to happen. I can't even believe they're writing this in here. There's a 4% chance of the Fed staying paused. That's not going to happen here. Then it's basically an 87.5% chance of a 25 cut, 7.5% chance of a 50 cut. I don't see that at all, the 50 cut. So let's focus here, okay? So if they give us a hawkish 25, like, hey, we're just going to normalize a little bit, but, inflation's still a problem, and we're not worried about jobs right now because the break even is down. Okay, well, then, the Fed speak talks about hiring inflecting higher. then, you know, maybe the S&P 500 shaves off 50 basis points. However, if you get a dovish Fed that's like, hey, inflation is transitory and, you know, we got to get the job market back up, bullish. Like, hey, great, bullish catalyst. Let's get up another 50 basis. Oh, crap. I forgot to change it. I still got to change the damn coupon code. Okay. Anyway, we're going to change that. Hey, I guess that means you still have another, like, probably, I don't know, 20 minutes or so to get in if you want. But anyway, Meet Kevin membership, we're going to raise the price on it. I got to raise the price before the Fed meeting. I got to get to this. But I also got to get to these properties that I committed the vendors to get to. So I got to go. But anyway, so this is like, this is a good thing, right? This is broadly bullish. The problem is what's going on with that break-even rate. Well, I posted on in the Meet Kevin app. You can look at this for free. I posted in the Meet Kevin app for free over the weekend that The Economist has a really good piece on what's going on with the actual economy. Their argument is that, yes, the economy is slowed, but even if the economy is slowing 1.4% of the first half, that's still pretty dang good. So there are few signs right now of things getting much worse. And Americans, frankly, just continue to spend. So if Americans keep spending, who cares? Like, this is a good thing. Retail sales are strong. The Atlanta Fed GDP is strong, though a lot of this is propped up on the leg of, you know, NVIDIA and AI. And then they say maybe the jobs numbers aren't that bad because, yes, the population is shrinking or stalling, but I should say CBO, not FBO. The CBO estimates net migration in 2025 is just 400,000. That's down from 2 million last year. So, of course, when net migration is plummeting like that, maybe the break-even jobs rate is significantly lower. So that's when I started getting to thinking to myself, okay, so like how low is like where it should be? What's your break-even rate, The Economist? Well, they answer that. First, they talk about how encounters with customs are plummeting. 200K in 23 under Biden in July, 100K under Biden in July 24, and then 8,000 under Trump in July, very, very low. Labor market break-even rate, they say the census currently suggests a 90,000 job break-even rate. However, if you include these migration adjustments, maybe we're just at 50K. And if you assume migration is actually closer to 0 under Trump, maybe the break-even rate for job numbers is just 30,000. Now, we sit at 22,000 in the last report. The 3-month average is 29,000. So is it possible we're right there? Yes. But then what happens when we get the revisions next year and then they end up slicing off a bunch of those jobs, right? That's going to be another risk factor where we're like, oh my gosh, you know, what happens if like we're bullish about, oh yeah, we're at this new break-even level or what? Oh, I'm getting a little bit of lag right now. I'm going to have to fix that. You know, we're bullish or whatever. But then all of a sudden they revise all that away and then, oh, the Fed's too late again, right? We got some work to do. So we'll see. But, you know, this is the Fed meeting coming up. It's going to be interesting. Baron's going to be there. Cook's going to be there. And 5.3% chance of a 50. You know about the Meet Kevin membership. You've heard that a million times. Trump, bullish on real estate. Did you see that? Look at this. Oh, not that one. I got to figure out all these new buttons. Sorry. It's actually just, oh, man. I think that's actually what's causing the lag here. No, it's not that one. Hold on. And if the Trump house... oh, I get it. I see what I did wrong. I accidentally put both of them over. So it is... I just have to remove the Meet Kevin membership. There it is. Look at that. Too late. Must cut interest rates now. And bigger than he had in mind. Housing will soar. Yes. This is good.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
All right, so anyway, guys, if you can believe it, there's a whole nother video to watch. But if we're being real, probably want to listen to this fella. Here we go.
Listen, family, y'all already know what time it is. Monday sets the tone, so you know I gotta love on you guys. Listen, if you made money today, let me know down in the comments below. As always, I got a jam-packed video, so please make sure you keep it locked. Make sure you subscribe. Help this video get at least 1,000 likes. Without further ado, let's go ahead and dive into it. I'm kicking it off with my favorite portion of the video, which is loving on the family, guys. Listen, if you are new around here, Coach want to say welcome. If you have just joined us recently, I need you to go back and watch last night's video, Saturday video, and Friday video to bring yourself up to speed to what I'm about to talk about right now. I don't want you to miss how we gonna crush the last 3 months of the year, okay? Around here, Coach don't care nothing about what the market is doing. We are technical driven, okay? The money is in the charts, so that's how we do this consistently, all right? Listen to this, guys. Good evening, Coach. Sorry to bother you at this time, but I had to text you and say, wow. On target as always, you are indeed the GOAT. The $20 lift target was hit. I want to say major salute. Did y'all see the 20 piece today? I told y'all to put 20 ball in the chat yesterday. Did you guys see the 20 piece get hit on today? We going to McDonald's and we ordering a 20 piece chicken nugget because lift target number 1. Don't get it twisted. Okay, I always want to give you guys something to shoot for on our 100K challenge so you know how to be measured in your approach, okay? You never fail. I'm currently up 15%. That's a solid profit, but like you mentioned before, I'm holding to January 15, 2027, and I'm aiming for $30. We're going to have another party when we hit 30. Who else I got? Jonathan. Look at this. Jonathan came with the receipts. Y'all know that's how we do around here. Everybody rock with the same game. One thing I love about you guys, we have cultivated a culture of transparency and honesty, okay? Jonathan, my man, look at this. He said, thank you, Chris. I appreciate your leadership. I will ride it up to 28 or 29. I love it. Jay, if you see this, did you hear what he said? I taught him and showed him that the price target is 30. He's already planting in his head he ain't gonna be greedy. 28 or 29, just like I might do. When I get 28, I'm gonna show y'all. We gonna get busy in just a second. But he's already up 45%. Let me know how much you guys are up, and y'all gotta beat the teacher, okay? Who else we got? Corell, if you see this, he said, Coach, he said, I hit that $20 target. We call that a 20-piece chicken nugget or a 20 ball. I want to say major salute. Corell is up 40. Look at this, 40.5%. This is what I'm talking about. Now his average cost is killing mine. Okay, now he really getting busy. This is what it's about. Then I got Caroline. She just titled this lift. She said, this is just an appreciation email. Getting back up after making some huge losses. How many of y'all been there? Go love on Caroline if you've been there. If you took some nicks and knacks, if you took some bumps and bruises, if you got knocked down but got back up, make sure you go love on somebody. This game, if anybody's trying to act like it's just a straight ride all the way through, it ain't that. If you rocking with me, we gonna get our head cracked many times, but we gonna do a lot of head cracking too though, okay? But getting back up, making some huge losses due to my poor risk management and some greed. We gonna tighten up the risk management. That's what my next upcoming video is gonna be about, just to make sure we good in that department, okay? She said, now I'm doing things slowly and giving myself time, and I believe I will get back up again soon. Thank you for the lift play. It's cooking, sir. You are appreciated. Praying for your covering and protection out of the Lord Jesus over your life. I love it, okay? Now, y'all already know, man, we got to get in our bag. Y'all know how Coach do. I'm going to always take you under the hood, okay? Let's go look at this right now. All right, what we got? Let's look at this. Lift, our $15 call is currently sitting at $835. Let's go ahead and unpack this, okay? Everybody, if you rock with me, please run the plays we call in the huddle, okay? I don't miss. I'm not going to let you miss. You got to trust the process, guys, okay? You're going to go through this game. You're going to meet a lot of people. You're going to watch a lot of videos. But it ain't nothing like when you rocking with the best, okay? You will soon see and find out. Go watch any video you need to watch. And then when you get back here, you're going to see what I'm talking about, okay? But check this out, man. My average cost is $563. Y'all got to beat the teacher. You see how Corral smacked me? His was $390. Everybody else, make sure you beat the teacher, okay? When this pull back, all you do is buy it low. We're gonna rinse and repeat, and we're gonna change our financial futures. Okay. The current price is 835. Look at this. So all y'all was up 45%, just like me. We all up 40%. Okay. I told you we was hitting target number one, $20. Okay. So just think about this, man. When did the coach tell you about this play? This is what I mean about changing your life. Okay. Some of y'all gonna get your feet wet with 1 or 2 contracts, but I love that, okay? Because I want you to see what's possible. All right. So look, we are already at target number one. What's the next target, everybody? Everybody write 30 in the chat. We call that a 30 piece. So we going up to McDonald's. We going through the
SYM.
drive-through. Now we ain't eating the food. We throwing it in the trash, okay? We don't eat trash food, but we going to the drive-through just to talk to the intercom, and we gonna order a 30-piece nugget with sweet and sour sauce, okay? And then check this out, guys. When we hit 30, or like it was laid out before, is when we get to 28, 29, we gonna get ready to start locking in some profits. Look at this. People always say, Coach, what do I do? So like, you see how I got 100 contracts? So if this keep going, I'm just gonna ride with 100 contracts, okay? If this come back down below 563, you don't panic, okay? We got this play to 2027. This play is gonna cook. I'm just telling you 30. This play might go to 42, might go to 56, but I just want you to have something to shoot for, because there's other plays that's going to be cooking too. And then you make the money off this, boom, you go hop in another fast car, and then boom, you go to that destination, okay? But if you rock it with Coach, you stick in our plays to our levels are hit, all right? We ain't deviating from the plan. We laid out $20 target number one. We sitting at $20.35. And then now everybody should be up at least 40%, 15 to 40% based on when you join, okay? I'm going to always help you guys make money. You should be up 15% to at least.
All right, guys, let's jump into another breakdown. I think you're going to like this one. There's one robotic stock that is about to break out, in my humble opinion. It is an automation stock. It's not Tesla. Tesla's already gone up within the past few days. There are other robotic stocks riding on the coattails of Tesla, so they're going up in sympathy. And I think the best one to buy is the one that has a multi-$100 million deal with Walmart to buy Walmart's robotics team and technology. I think it's partially an acqui-hire and definitely a technology play. Walmart Labs was a big deal and has been around for a while. I know Walmart doesn't sound technologically advanced. It really is. And this company is leading the warehouse automation category of robotics, which is a massive, massive space. So let's jump into the chart and take a look at what we're doing here. Got some motivation here to buy this given today's move, okay? Solid, but it also wasn't such a huge stick that it feels like this company's already gone. I mean, Tesla's already gone for sure. So this is the sympathy move on SYM, Symbiotic. And the volume is not anything unusual either. So volume tends to dry up before a big move to the upside. That's okay. That's actually good for us if the volume isn't great. This is the other company I wanted to compare it with. It did go RR today as well, okay? But this is also more a hospitality stock. It's a low price stock. It's under $5. SYM is where we want to have our attention. It's in that $50 range. It's has a great level to risk off of at about $48, which is not only in the past week, but also back in the middle of this year in July. And if we zoom way out, we can see we're going to get a pretty interesting level up here around 64, okay? 62, 63, 64. That's from about exactly 2 years ago, okay? So there aren't going to be bag holders up here for the most part. We can see that on the volume profile. There's not a lot of people owning stock from up here. And if they did, they would have still sold it. This actually includes folks from 2 years ago, when in fact they would have likely sold it, okay? So really what we're looking at is something more like the initial chart I had up here, which is very little volume up here, which is great for us because once it gets up here, there's a ton of blue skies. Very clear risk level. One more level up here at 54 to take an eye at. Take a whack at. You know, if it hits that level and bounce off it, then we back off. Okay, maybe give it some time to digest. And I'm not saying you have to look at your portfolio every couple of days, every week even. I purposely pick stocks that I think are somewhat safe, so you can sort of walk away. That's why we do this, so we can live our lives or work and get money to put into these stocks in the first place. Now, what am I talking about with this Walmart agreement? Okay, again, Tesla is the leader. That's why there's a ton of euphoria in the space. But this company, Sim, I think is super interesting as a business-to-business play, because they did acquire Walmart's robotics unit. Okay, huge, huge deal. Again, not to be confused with the little company that has a lot of buzz right now, but serves cocktails. Okay, I do think this one has a lot of room to the upside, but this one is safer, okay? Particularly today as I'm making this video and in the following days to the next week as you see this. This is the safer play right now because they have that Walmart connection. With that said, I don't know that automating warehouse operations is enough to buy it. I mean, because that could take years. We do want to look for any other new deals. If you see any other big brand names partnering or cutting deals with SYM, or SYM acquiring part of their units, that will be something to take a look at. I don't really know that they need more technology than Walmart's warehouse automation, which is the most advanced as far as I understand it. I'm not a grocer or mass market retail specialist, but I'm pretty sure Walmart Labs is very advanced. Now, with all of this sort of backdrop to excitement in Symbiotic, I just want to say that they did have a miss on earnings, okay? Even though they had a 40% revenue growth and a 26% increase year over year. I don't really look at these numbers exactly, 26% versus 10% versus whatever. Revenue went up, okay, profitability went up. They have a strong cash position. And with all of that, okay, and the revenue being $500 million, they did have a net loss still, okay? And the stock did pull back. We see this in the chart. I want to mention this because I think this is something we look at a lot. We see a lot of stocks failing on earnings, but I've said this again and again, but I'll say it again. A lot of stocks failed on Q2 earnings results. So this is normal. And to have a stock pull back and hold is actually a bullish signal. And the single reason to buy this is how clear this pivot level is. And the more there's compressed trading, investing, buy and sell activity at a level, the better it is for us to use that as a risk level, because it means a lot of people are agreeing that that number is really important as a price for the stock. So if it gets down there and starts to reject that level, we get out. We don't argue with the market. We flow with it, okay? If it gets down there and holds, maybe you hold your position and then you have a lot of blue skies up to the mid 60s, where that next level is around 64, okay? So there's $15 or more of upside with a few dollars of risk. That's the kind of risk reward that makes big percent growth in the accounts, no matter what your account size is. So if you like these stock ideas, if you want to talk about them, head over to stockscommunity.com. You can try it out for 7 days for $25. I'm in there. We can chat on a daily basis in there. If you like this video, you want to see more videos, hit that subscribe button, and I will see you in the next one. Now, let's see what else Chris has got going on.
40%, okay? But then we are going to go to $30 from here, and then boop, you're going to see the magic happen. You're going to be like, oh my God. So Coach is already up nearly $30,000 on this play. We just bought this together as a family. Don't nobody get left behind back here. We all in our plays together, we win together, and we get our head cracked together, okay? That's how it go down. You have to learn. You got to see me go through the ups and downs. That's how you get better, okay? But we going to win definitely more than we lose, okay? But the losses are the lessons that lead you to success, okay? That's why it is good on the journey, okay? But listen to this, man. We are at target number 1, and I couldn't be more proud, okay? So I want to go to this. I want to show you. Look at this. We're currently sitting at 2035. We were down here at 18. We ran up to 1959. Then we went sideways for a minute. 1923 was support. We had more support at 1936. And then boom. We kind of went up to right here, which is 1981. We couldn't go back lower than 1968. And then boom, we just took off the close today. Broke through 20. So listen, remember I told you when you hit a number, you got to knock 3 times, okay? So we hit 20. So now, let's see, 19. Do you guys see this top right here? I want you to write these levels out. I need to teach you how this go. You ever hear us talk about a pullback? So it's going to pull back to 1980, or this top right here. The tip of this top is 1959. So those of you that want to say, Coach, I didn't get in. I didn't buy this. Am I too late? No. You need to get it at 1959 or 1980, okay? It's still going to $30. You're not late. You just didn't miss, you just didn't get in at our initial date on September 5th, okay? But that don't matter. The plays I give you are going to cook. The plays I give you are going to hit their targets as well. So trust the process. Anybody making money with UNH? Anybody making money with APOD? Okay. Anybody making money with GLD? Okay. Anybody making money with CoreWeave? My list is long and strong, guys. I can do this all day. Okay. Lift is the play of the day, though, that I want to make sure you guys are properly positioned and properly set up with, okay? So target number 1 has been achieved. Look, everybody pat themselves on the back. Job well done. You should be up 15% to 40%, okay? I want you to see what's possible, okay? So in the future, you might say, I did 1 contract with you, Coach. Next time you give us a play, I'm going to do 5 contracts. The more comfortable you get, you see how my process is, guys, then you go to 10 contracts. Then you go to 25 contracts. And you go to whatever is feasible for you and what aligns with your risk tolerance, okay? But no matter what we do, we stick with our plays till we hit the targets, okay? One last thing before I get you up out of here about a stop loss. So let's look at this, okay? Let's look at this real quick. Let's go back to the options. So somebody said, Coach, where will your stop loss be? So do you see my average cost, everybody? All right. So 2 things. This is how you dollar cost average. You hit trade and you hit buy. And then if I wanted to add more to this play, look how it go right to 115. I can add 5 more contracts. Okay. I'll raise my average cost, but I'll have more of a return on my investment when we hit $30. Okay, my targets will get hit. I don't worry about that. We need to trust the process. Does that make sense? But look at this. That's how you dollar cost average. So if this was to come down to 563, I'm not selling. I'm gonna buy it at $5 even, $4.63, $4 even. My stop loss would be around $3 if it came down there. But because this played out 2027, I wouldn't even sell it there. I would just buy more. I would do this right here. But look, it'll be me putting this at something like 350. Okay, boom. I'll just buy more at that level, knowing we're still going to $20 and $30. Okay. Now let me back up out of here. You hit this is how you put your stop loss on. You hit sell. You see where it say limit order at the top? You will put a stop limit. Okay, and so if you wanted to put it under your average cost, so what was Coach's 563? So say I would put mine at 263. This is where Coach would stop out at, and I will put this at 2.60. So if it ever come down that low, boom, that's where I would get out at, just so it don't go down more. Then I'll get my money out, reposition, and rinse and repeat. Here's how you do a trailing stop loss. Okay, let's get these numbers up out of here. Okay, say this goes, so it's 8:30 now. Say we put this at 7:30. Let me do this. Put this at 7:35, and you would put this at 7:30. Okay, so then you would do this. This is how you do a trailing stop loss. So you would stay in it long as it don't come back to this price, and then it's gonna go to 9:35 next. Okay, and then you would just move this to 8:35, and you just keep trailing it by 100 points. Write this down, by 100 points. Okay, these are little nuggets and nuances that I want you to do. You gotta know how to let your winners be big wins, and we gotta keep our losses small. Okay.
Sorry, guys, I
Class is
completely
over
forgot
for
to get
today.
the screen.
That lesson is in the books. Listen, guys, everybody be in the Discord.
The voice
First
is
thing
kind of
we learn,
calming, though, even
make
without
sure
the screen.
you guys consider joining the money team. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see end result. Very few consider the journey. Do me a favor. Don't forget to subscribe to the channel. Make sure you guys grab some free stuff. Use my link below, and I'll catch you guys in the next one. Peace.
All right. I think that's gonna be it. See you guys in the next one. Check out those recent videos. Hit that subscribe button if you want to see more of this. And I did respond to some comments down below during the live. So if you join these in the future, head over to YouTube and can talk there. Otherwise, I will see you in the community at stockscommunity.com. $25 for the first 7 days. Take care.